Everyone, and welcome to today's Market Snapshot. My name is Craig Erlam, Senior Market Analyst at OANDA. As always, let's start today's video with a look at the markets. Now, we've not long into the US session now. We're seeing equity markets in Europe and the US all trading lower. Europe around 1.5 to 2.5%. In the US, we're currently down around 1% shortly after the open. Broadly behind these declines appears to be the sell-off which we're seeing in commodity markets. We're seeing oil down more than 1%, copper down 1.4% as well. We're also seeing declines in iron ore and other commodities as well. So I think this appears to be broadly behind the declines which we're seeing in equity markets, although broadly speaking this is a wide ranging sell-off that we're seeing in equity markets at the start of the week, really continuing the losses which really began on Friday. In the FX space, we are seeing the yen appreciating yet again, just continuing really the building on the moves from last week when the Bank of Japan declined to announce further monetary stimulus, which was beginning to be priced into the markets. So now we are seeing things like the dollar yen closing in around 105 area, which is going to be a massive support level for it. We're seeing euro yen at 122, sterling yen around 154.50. The other place where we've seen some important moves today is the Australian dollar. We had the RBA cut interest rates overnight to 1.75%. This is a record low for Australian interest rates, and this really just comes off the back of those moves that we saw last week in the CPI reading, where we saw CPI fall into deflation territory very unexpectedly in a very sharp move. So this was broadly a reaction to the moves which we saw in the March inflation data. Now, let's take a look at what we've got in store today and touch on some of the main events which you've seen so far throughout the day. I've just touched on the RBA decision overnight there, so that's 1.75% interest rates. We did see quite a decent response in China, considering the fact that we had some disappointing manufacturing data here. In fact, the Shanghai Composite was one of the only markets where we actually saw gains overnight, where we saw, and these are up. This is up 1.87% after those moves overnight. And like I say, this comes off the back of some negative manufacturing data. The Kaixin manufacturing PMI falling to 49.4, so back into remaining in contraction territory for a second consecutive month now. And this follows the official manufacturing PMI earlier in the week, which was at 50.1, I believe. But the difference between the two is simply that the official manufacturing PMI just put more weight on the larger state-owned manufacturing firms, whereas Kaixin manufacturing PMI focuses more on small to medium-sized private enterprises. So when you do see large stimulus efforts, when you do see large monetary stimulus and fiscal stimulus, these two tend to support the large state-owned manufacturers before we see the benefit in the smaller manufacturing firms. So that may explain some of the disparity which we've got in the data here at this stage. Now, it's not obviously clear at this stage whether this is going to filter through into the broader economy and we're going to see the benefit in the smaller to medium-sized manufacturers. We'll have to wait and see for that. But I think the fact that we've had broadly speaking positive data from China over the past month or so, I think that's what's enabled things like the Shanghai Composite to weather the storm on this occasion. The market manufacturing PMI for the UK fell to 49.2. This is the biggest, this is the sharpest rate of contraction in more than 3 years. And again, this comes off the back of weakness in the retail sector, in the energy markets as well. But also as well, we've got the EU referendum in June, which appears to be weighing not only on domestic demand but also export demand as well. Still to come today, we've got a few pieces of data we're going to hear. We've got API weekly crude oil stocks, which is becoming increasingly watched by the markets ahead of the EIA crude inventories tomorrow. We're going to hear, got two speeches to come today, one from Loretta Mester from the FOMC, and also Dennis Lockhart as well. But really, I think the key event this week is going to be the US jobs report on Friday. We've got the ADP figures to come tomorrow before we get the non-farm payrolls and the unemployment data and the wages data as well. That's all to come on Friday, and you do often see a little bit of caution in the market ahead of these important releases. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.